now put the spotlight then on the big interview of the day, and that is InvestorAI, which has secured 80 crores in equity funding from Ashish Kacholia. Remember, InvestorAI was founded in 2018 and has since used AI to produce successful investment outcomes for a wide array of investors. In fact, the company uses AI models and robotics to make stock recommendations, packages these into an easy-to-use combination and deliver a one-click user experience. And of course, to discuss more about the funding, we're now joined, all right, so we're now joined by Bruce Keith, the co-founder and CEO of InvestorAI. Bruce, thank you very much for taking the time out for speaking with ET now. Tell us a bit about your business. I understand that you are dabbling in the insurance business, but tell us a bit more about that, the kind of products and services that you offer, and how will this funding that you have raised of 80 crore, how will that be deployed and where will it be deployed?
Thanks. Really delighted to be here. So our business, InvestorAI, really looks to help digital investors to achieve better investment returns by providing institutional quality investment solutions. And we do that using AI to, we hope, make better predictions, better investment predictions, and through a kind of delivery mechanism that makes it much more convenient and easy for individual investors to use. So we're delighted to have just closed our Series A round, and really see this as a big step on our next stage of growth. The deployment of the funds will be partly on products. So we currently have 2 products. We intend to increase the number of product lines. So going multi-product is a key part of what we want to do. Part of it will be in infrastructure, as you would expect in any technology or AI business, and the kind of final piece will be around sales and marketing and really kind of driving growth, predominantly in India, over the coming years.
All right, Bruce. So fast-paced developments indeed happening globally as far as AI is concerned. I mean, of course, if you look at the Western markets with respect to OpenAI, that is the biggest company as far as AI is concerned. Anthropic as well making waves. But what really gave you the confidence to start operations with all of your focus on the India market specifically?
So look, we've been going since 2018, and we've looked at and we've sold into kind of various markets. And it was through the pandemic that really kind of focused us on India and the opportunity set in India. You know, kind of why AI? So if I look across my co-founders, Sarthak, one of my co-founders is kind of Mr. AI, and it's just got so much kind of strength in that area that it was a kind of obvious technology for us to use. And we felt that the whole wealth management industry really needed AI and advanced tech to kind of bring it forward. So kind of in terms of why AI, we felt it was an obvious answer to a kind of question around kind of wealth tech and how you bring the cost of manufacture down, how you get the sort of things that hedge funds have, how you get that in the hands of individual investors. That's kind of really important. And I've worked in the hedge fund industry and I've seen that. And if we can deliver that to end retail investors, that's kind of really important. Why India? You know, the opportunity set's huge. And you know, from an equity markets perspective, I think it's the most exciting market and will be for the next 20, 30 years. So, you know, kind of why India? I guess from someone who's outside, who's come in, it's just such a kind of obvious question for me. I don't see anywhere else I'd rather be right now.
Right, Bruce, and we'll talk a bit about your optimism as far as India is concerned. But let me also ask you, this very pertinent question. Now, the funding of 80 crores into your company is coming in at a time when overall funding in AI startups has seen a fall by about 90% in Q1 of FY24. In fact, if I were to take you through some other details, in fact, Q2 of CY24 got only 8 million in funding. And this is, of course, I'm referring to the data that is coming in from Attraction. Now, this could be because of of, a cyclical downturn. But how important is that for you? And what are investors really looking at when they're looking at deploying capital in AI-led startups? Because it is the buzzword, but how can a startup really make a cut as far as managing funding from investors is concerned?
I think, the trouble looking quarter on quarter is, sometimes you see those jumps, but deals take a bit of time to come through. I think we'll see that number bounce back. If I think about what investors are looking at, I think it falls into two categories. The first category is if you're looking for a horizontal AI play, you need scale. You need lots and lots of scale and lots of data. And I think it's quite difficult to see many of those across different sectors. So I think the horizontal plays, some of the big ones that you see in the US are kind of quite obvious. I think then you have to look at vertical plays, and a vertical play in AI is all about going very deep, very narrow in a sector. So for us, that's the wealth management and asset management space. And by staying narrow and staying focused on that, you can train your AI in a way that can really make a difference in that sector. So I think what we'll see is more and more vertical AI plays from investors going forward.
AI play and quarter-on-quarter dip, you say that could be a result of lower deal momentum. But internationally, Bruce, experts say that VCs are buying shares of these late-stage startups on the secondary market, and that they are doing through financial instruments that are special purpose vehicles. Now, is that a sign that AI startups are perhaps living in a bubble?
I think the problem with AI is everyone wants to claim to have AI. So, you've got to sort of parse through what is actually AI and what is really just some kind of expert system. So I think part of it is there's been a little bit of a bubble as everyone's sort of kind of raced to get in. I think investors are smart enough to figure out what is genuinely AI and what isn't, and what is therefore repeatable going forward. We've been doing this for 2.5, 3 years in terms of our current vertical, and we've got results that kind of prove outperformance again and again and again. And I think showing those kind of outcomes and those kind of results is really important for investors.
All right, and one final question, Bruce, before we let you go. Now, the capital markets in India have seen a huge surge of interest, from retail investors and, of course, FIIs and DIIs as well, and which is why I think your company thought of investing into the country. But with growth coming in, caution is also building up, and protecting investor interest, hence, is key. Now, how are you looking at that piece that is developing? Because even regulators have flagged concerns as far as protecting investor interest is concerned.
So from a kind of capital markets perspective, first of all, India is just a great place to invest just now. And I think India is set up for a bull run of 20 years. Now, it's going to have dips along the way, so it's not going to be a straight line. But I think what we're looking at in India today, 20, 30 years, it's a bit like looking at the S&P round about the start of the kind of Reagan administration. I think we're in for a long, long run. I think all of the socioeconomic aspects that are going on in India, and the fact that energy aside, and that'll change, India is largely self-contained. So I think that whole growth story is there. Now, things never grow in a straight line. There'll be kind of dips along the way. I think the regulator's absolutely right to be concerned about the growth around derivatives in particular as it relates to the retail market. And if I look at the F&O market, the opportunity set there is big, because of the sheer volumes that are taking place in the country. And I think the regulator is right to sort of focus on that, because whilst it's a bull market overall, there's gonna be drops along the way, and that's where the kind of inexperienced retail investor runs the risk of being hurt. From our perspective, we think that using AI really should help protect and help those investors get to better investment decisions. So for me, this is, if you think about, to use a Marvel analogy, we think about our AI as giving people an Iron Man costume. put an Iron Man costume on, you're still in control, but it helps you get there quicker.
All right, that's an interesting analogy, Bruce. Thank you very much for taking the time out and speaking with ET Now.